Increasing mortgage payments are draining people's savings. Let's have a look. Hello everyone, Florian here, and welcome to another episode of HeiseSays. Grab your stein of coffee because, well, I just finished recording a video about for sales and mortgage prisons, and in it I mentioned the fact that we have to keep an eye out for, well, articles discussing mortgage sob stories, people hard done by, and well, it took me about 30 seconds and I think I found one. Let's have a look here. So, draining your savings. Aussie couple reveals $500 a month interest rate rise pain. Now, for those of you playing at home, guys, the cash rate is now at, hang on, sorry about that, 2.35%. These increases are, well, just nuts. They are nuts. Not even in 2009 did we have this many increases back to back. They gave us a month off back then. So, we're tougher now. So let's have a look at this, guys. A young couple who bought into the Australian dream are now hundreds of dollars worth a month, or worse off a month, and had to make some big changes. Okay, now this, I think this is what Alexis, this is the real point of the story here that she's talking. People have to make changes. This is the first time, I'll bet you can't, the first time that some people have ever actually had to worry about their finances. We haven't had nothing but rates going down forever, okay? It's been so long since rates have gone up. So I think some people have to finally tighten the belt and actually do a budget for the first time. So when Daniel Khan and his wife Noor bought their first home 18 months ago, it was a no-brainer. Why was it a no-brainer? No, it's not a no-brainer. You can't say it's a no-brainer when the whole article is about them struggling to find $500 extra a month. I mean, that's not, and it shouldn't be a no-brainer. Oh, shit, this is how we're getting into this mess. We're all country full of no-brainers. The young couple who purchased in Glenhaven in Sydney's Hill District had long dreamt of the freedom and lifestyle promised by home ownership, and they secured a 100% variable rate with the banking giant ANZ. But after being slugged with 5 consecutive interest rate rises since May, the pair's repayments have already gone up by a staggering $500 a month. And it's a number that's only going to keep rising, with some economists expecting the cash rate to hit 3.6% in late 2023. Now, the banks, when they're giving you your mortgage, they should stress test a 3% buffer. That you should be able to afford to spend 3% higher, or meet the payments of 3% higher. Now, why? Well, I guess he probably must have believed. He must have believed that interest rates weren't going to go up, and that the RBA was correct and truthful in this when they said rates won't go up until 2024. That's why it didn't fix. I mean, people don't like fixed rates, but luckily the couple had expected rates to rise and had budgeted for them. And they are now doing their best not to live above their means and recheck all their finances to see if they can make savings in a worst-case scenario. Mr. Khan, 23, he's still very young, told news.com.au he hadn't expected the RBA to hike rates as aggressively as they had so far. Well, it may not even be over yet. It was something we expected would happen at some stage. So we went into it knowing that something like that would maybe happen, he explained. Then how was it a no-brainer? I knew it would happen when it did, but I didn't expect it to go as high as it is. About the amount per month has gone up around $500, which when we first brought to know, what? And it will get worse. Well, yeah, that is. But, I mean, he's in his early 20s. Just work more, mate. You'll be fine. You're still a young bloke. Come on, step up. Mr. Khan, who works in visual effects and animation, said buying was the right decision for him and his wife, but said he knew many people who currently owned their own homes who might not have the luxury and privilege to be able to keep them and maintain their lifestyle if interest rates kept rising as predicted. Well, they won't be able to maintain their lifestyle. that can go without saying. They're going to have to adjust their lifestyle and their expectations and make sacrifices to maintain their house. That's what you have to do, okay? That's what people are going to have to do. They had to do it in the past. They're going to have to do it again. And the further back you go through the years, people have always been bitching about housing affordability in Australia, even back in the days. Even the boomer generation was bitching in the 80s. They were bitching about housing being too expensive. Imagine that, and how much they're worth now. And he said his household had already made some changes in response to the RBA's ongoing moves. Since rates started rising, we did an overview of our expenses. Beforehand, we did have a vague budget, but we were not that attentive, he said. That's it, guys. This is when I'm saying for a lot of Australians, this is going to be a wake-up call for them just to get their shit together. This isn't going to be a cataclysmic collapse of our economic system because house prices go up. It's going to be felt in discretionary spending and retail spending. Is there an index of like gym memberships? Because that's kind of is it luxury? Is it discretionary? Is it a necessity? It's kind of one of those funny things there. That'd be interesting to see if that takes a hit. Since it started happening, we've been more cautious about everything and we've reviewed our spending. We were surprised to find how many things we'd forgotten to unsubscribe from. All those streaming services offer free trials and they bank on the fact you won't unsubscribe and we keep paying for them. Yes. We've also cut back on everything we don't need, which I think has helped. Mr. Khan said the couple didn't want to compromise their lifestyle too significantly, as that would defeat the purpose of buying a home. Ah, well, mate, you're saying that now. When rates, if they're at 7%, you'll compromise on your lifestyle a shitload. And in some ways, I would say that's actually a good thing. That's the stoic approach coming out here. You want to go through some challenging times because then you're not worried about them anymore. That's why I think fasting should be something that everyone's taught. Everyone should go, do a decent fast. Do a week without any food. Just drink water and a bit of salt, just so you experience that. So you know what it's like. So you're not afraid of going without food again. I get, how many articles do we look at where it's some real fat person and they're bitching and moaning about having to skip a meal? And I mean, the issue is there. Healthy food, and I'm talking good quality meat here, is much more expensive than all the processed crap that people are eating these days, all the high carb diet that most people have, that, they're addicted. Their glucose is spiking all the time. They're addicted. They get so hungry that for them it'd be a lot harder. Give them a week without food, they get into ketosis and they'd think straight for the first time in their life. Anyway, back on topic once again. I mean, that's another way to save money, guys. Yeah, think about it. All that money you're just wasting eating when you got a good lot of fat on your tummy to eat. There you go. There's my financial advice. The YouTuber said I was too fat to afford food, so I had to skip eating for a week to pay my mortgage. There we go. Is that positive or not? Yeah. See, we're not hard times yet. The government isn't telling us to skip meals, and Albo isn't going on TV telling you to eat your pets. Anyway, back on topic. I'm going stupid now. I'm tired. In the back of my mind, I wouldn't say I'm exactly nervous because we are prepared and we won't lose everything. But what worries me, will rates rise make us change our lifestyle in a day-to-day sense? I mean, mate, you sound like, he's just a kid, okay? How old is he, 24? He's still wet behind the ear. 23, yeah, he's just a kid, okay? Oh no, I may have to change my day-to-day life. Boo-hoo, bloody hoo. Oh, come on. When shit hits the fan, when stuff goes wrong, when disasters happen, when someone dies, when there's an accident, when a big deal you had suddenly disappears, or when just someone is an asshole and won't pay you and just cheats you out of hundreds of thousands of dollars, then you kind of don't worry as much about having to change your day-to-day sense. I mean, this guy's just young. He's just young. And he'll learn. He'll learn with experience. I guess that's why, my beard is much wider than his. Okay, that's what it is. So owning a home comes at a price, and it's a bit more expensive, but we're happy to do it because we like living where we live and the freedom it brings. Yeah, and they're young too. I mean, they're doing this in their early 20s. They'll just power through. It won't matter. But if that slowly starts being taken away, it makes you reconsider whether it's worth it. If you buy a house, then it just ends up draining your savings. What? Okay, I mean, you pay off the house. The bank can just take it all off you anyway if you go under. So another blow for homeowners. His comments come as the RBA, yep. Commonwealth Bank have all predicted the 50 basis point hike. Yep, according to Rate City, it'll go up $144. What else is there? The average variable borrower will soon be on a rate of over 5%. That's getting close to double what it was 5 months ago. Yes, because 5 months ago, the interest rates were insane. We're never going to see it again. If we do, they're really stuffed up. Okay, they're going to slowly creep this up. I hope they give it a bit of breathing room to see the impact of what they're doing, but they may not. They may up it again. Go stuff it. Let's get those rates up. We expect at least a dozen lenders will still be offering variables under 4%. The majority of experts expect the RBA to hold the cash rate next month in October, so that'll be exciting to see. Graham Cook, head of consumer research at Finder, said the combined cash rates, $800 a month. Anyway, borrowers who took out fixed rate home loans before the rate rises stated won't notice a difference straight away. Yeah, okay. There'll be shock and fear, and let's talk about this. So I was wrong. Oh, it wasn't a woest. It was okay. This is a weak woest me sob story bloody mortgage article, wasn't it? He's bitching and moaning, a young guy, that he may have to make some compromises on his day-to-day life. I just find that funny. I just find that funny, because we've been through some tough times. Running a small business, huge contract disappears. Then you've got to make some compromises on your day-to-day life. You just got to do it. You've got to take it one step at a time. Look at what you've done. Look at the financial mess you have and clean it out. I remember going through, I finally had enough of a break just to go through all of the accounts just to see where money was going. Because often it would just be, okay, we've got to get this done. Oh, look at this here. Oh, subscribe to that, this, that, the other. Just can lose a handle of it. And so many subscriptions, so many services. It just adds up. It all adds up. But, well, there you go, guys. Not quite a sob story. I think someone young who's going to learn some good, valuable lessons during a interesting economic period here in Australia. What do you reckon, guys? Keep sending me your sob stories. Let's have a look at what you find out there. And support, if you want to check out my other channels, check out HeiseBim and HeiseSays International for other content I create. And if you want to support us, there are a few ways you can. Financially, there we go, it's working now. Via YouTube or Patreon, using our referral links from Amazon, eBay, Independent Reserve or AussieBroadband, buying our pocket squares or calling us if you need an architect. Take care, everyone. Have a great day. I'll see you in the next episode of HeiseSays.